Bitcoin is an asset. It's not going away. I used to say, if it's not going to zero, it's going to 1 million. But there are a lot of people thinking, oh, it's too good to be true. The government will take away from you. It'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency, it's a digital property.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Michael Saylor shares his new prediction for Bitcoin in the next 10 years, and why he thinks that we are on the early edge of Bitcoin adoption. Saylor sees that BlackRock Bitcoin ETF is a good move for Bitcoin to start the next big bull run. So without wasting any time, let's dive into the video.
The years between 2025 and 2028 or 2029, you'll start to see companies starting to adopt this strategy because it gives you a very low cost of capital, and because Bitcoin is a good asset, because there's a lot of demand, etc. But we were unique because we had a need. We were in the right place at the right time. And as I said, we didn't really have the plan in the middle of 2020. The plan presented itself. It's hard for anybody else to look at this because 18 months ago, Bitcoin was 16,000 and everybody thought the crypto economy is going to zero. So it's only really been in the past 6 months. You could even argue 12 weeks. It's really January when the SEC approved the spot ETF that the mainstream consensus in the world was Bitcoin is an asset. It's not going away. I used to say, if it's not going to zero, it's going to 1 million. But there are a lot of people thinking, oh, it's too good to be true. The government will take away from you. It'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency. It's a digital property. And if it's a digital property, it's a store of value. And I'm going to buy it as a store of value or buy it through the ETF and hold it a long time. And when the SEC approved 10 Bitcoin ETFs, mainstream Wall Street consensus shifted to, okay, it's going to be around, and then opened up an avalanche of enthusiasm. And that kicked us into this Bitcoin gold rush era. For the next 10 years, every quarter, there'll be more enthusiasm, more adoption, more awareness. But it's like year one of Bitcoin as an institutional asset. Companies will do this, but it's hard for them to move that fast. Normally, if something is new for the last 3 years and you're in the 4th year, you're an early adopter. That's how fast corporations move. So I think it does happen, but I think that we're still very close to the crypto winter. So many bankruptcies, so many meltdowns. We need to get a little bit of distance from that and stabilize. And at that point, more conservative companies will start to move into this space.
BlackRock shares Bitcoin Trust, IBIT, has notched its first day of $0 in inflows since Bitcoin exchange-traded funds, ETF, were introduced in the United States in January. Ever since its launch on January 11, IBIT has consistently attracted investments worth millions of dollars daily, racking up nearly $15.5 billion in just 71 days. The inflow streak ended for BlackRock on April 24 after it recorded $0 of inflows. Most of the other Bitcoin ETF participants witnessed a dry spell as well. Of the 11 United States-registered Bitcoin ETF, Fidelity Wise Origin Bitcoin Fund, FBTC, and ARK 21 Shares Bitcoin ETF, ARKB, were the only two to record inflows of $5.6 million and $4.2 million, respectively. Additionally, Grayscale Bitcoin Trust ETF continued to bleed. On April 24, GBT recorded $130.04 million in outflows. As a result, the spot Bitcoin ETF realized a net outflow of $120.6 million on the day. While the lack of inflows is a first for IBIT, it's not uncommon among other ETF participants. Fidelity's FBTC, for example, has notched 3 days of $0 inflows in the last 2 weeks. To date, the Bitcoin ETF market in the U.S. has accumulated a net $12.3 billion in Bitcoin. However, GBTC outflows have offset some of the inflows notched by the remaining 9 Bitcoin ETF. As of January 11, outflows from GBTC exceed $17 billion. Some of the Bitcoin ETF market participants are also in the process of applying for other ETF in the United States. However, the Securities and Exchange Commission recently delayed the approval decisions for several of them. The Commission finds that it is appropriate to designate a longer period within which to issue an order approving or disapproving the proposed rule change, so that it has sufficient time to consider the proposed rule change, as modified by Amendment No. 1, the agency wrote in its notice on April 23. The SEC's decision on whether to allow the conversion of Grayscale's ETH Trust to a spot ETH exchange-traded product on NYSE Arca has been extended by 60 days to June 23.
First of all, it's based on Bitcoin, which is a paradigm shift. It's a digital commodity instead of a physical commodity. That's a big idea. $1 billion of digital energy instead of $1 billion of oil. The second big idea is Bitcoin does one better. It turns the commodity into a scarcity. It's the only commodity in the world that's got a cap of 21 million. Every other commodity like soybeans or oil or natural gas or gold is infinitely producible. So there's a lot of price supply elasticity.
Exactly.
That's why it doesn't make sense to buy billions of dollars of oil and hold it for 10 years. That's why we don't use oil as a treasury reserve asset, because there's too much of it. So Bitcoin is a scarcity. That's the second revolution. I think that in the crypto space, there's so much confusion. There's so many different things going on. Everybody's got so many different things they're working on. And also there's so much chaos and volatility over the past few years.
Yeah.
With the crypto winter, it's hard to focus. And of course, it all becomes clear in hindsight. If you look back 4 years and then you get out of the crypto winter and you take a deep breath, you're like, oh, I see how that works now. But even I didn't see how it was going to work 2 years ago,
Exactly.
right?
Yeah, exactly.
2 years ago, I thought I'm going to do it because I can do it. But I didn't understand all of the math and all of the economics and all the theory. After you've done something 3 or 4 times and you've thought about a lot more, the theory becomes clearer. And there's still a lot of regulatory uncertainty. I mean, it wasn't clear what's going to happen with every single crypto application or use case everywhere in the world for the past 24 months. So there's a lot of people have been waiting for certain shoes to drop or for certain decisions to be made. I think that what you could say in the middle of 2024 is it's pretty clear in the U.S. capital markets that the regulators have embraced Bitcoin as a commodity, a digital commodity, and the investors have embraced Bitcoin as a digital property or store of value investment. And those two things, there's broad consensus on. And if you're building something based on those two insights, you can build a very, very big business, right? Like MicroStrategy's gone from 600 million enterprise value to 35 billion. You can build something big, but those two insights, they weren't clear 2 years ago. I couldn't have said, 10 companies on Wall Street will all agree on that 2 years ago, and the SEC will let you sell that. So I think we're just 12 weeks into the institutional adoption phase, and every day we watch, money flows into the spot Bitcoin ETFs, and you see 50 million, 100 million, 200 million. You can see it's starting to simmer, and I think that will cause people's wheels to turn, and they'll start to think about what's the next thing.
Historically, post-halving periods have been characterized by increased volatility in the crypto market. This volatility stems from a combination of factors, including uncertainty among miners and investors about the future supply of Bitcoin and the impact on its price. Additionally, traders often speculate on the potential price movements following the halving event, leading to heightened market activity. The recent Bitcoin halving event, which occurred on April 20, had already set the stage for increased volatility in the crypto market. Anticipating short-term fluctuations, investors were prepared for a bumpy ride. The post-halving volatility has contributed to the current market crash by adding to the overall uncertainty and instability. While some investors anticipated short-term fluctuations following the halving, the combination of regulatory actions, geopolitical tensions, and other external factors has amplified the market's volatility, leading to the sudden downturn in prices. The prediction by Rect Capital, suggesting that the next bull market peak may occur 518 to 546 days after the halving, adds another layer of uncertainty to the market. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.